Welcome to TheoTrade. This is Don Kaufman. It's November 6th, 2024, the day after the election, the explosive move to the upside. But you know what I'm going to show you here in a moment? This is exactly what the marketplace anticipated. I'm going to cover that and much more here, of course, in this TheoTrade evening video. Let's start with the S&Ps, which are presently up 138 handles. Look, you know, a lot of that, the election volatility, it played out, but it predominantly played out in kind of the middle of the night. You didn't miss a whole lot. Like the move right now, though, you know, people look at this, it's an unprecedented move. Look, it's 2.3%. And the point that I wanted to make over here, when I say this is exactly what the marketplace expected, this is the SPX, it's the expected move. And if you take a look at the expected move, the marketplace, you know, for all intents and purpose, it's about $150 expected move, right? So throughout the course of the week, you're expecting this, you know, plus or minus $150 expected move. And, you know, we're home. Like, look at trade basically this morning. Now, some of the move is outside of it, but look at trade this morning. When I say that, you know, well, it's an unprecedented move, being a little facetious, because as I said, it's exactly what the marketplace anticipated. We literally opened on the upper edge of the expected move. In fact, last night, you know, while the election was still going on, while the, you know, the count was still going on, it was still very much undecided. I was like, look, if we move up, we're going to move up right to the upper edge of this expected move. And as I said, we're home. Now, here's the unprecedented side of this. The unprecedented side of this, you got to look at stuff like, you know, the dollar, the move inside of the dollar, even though it backed off a little bit, that's wild. The move inside of the euro, tried for the corner and missed. Then you start looking at stuff like the Russell. That right there, people, that's the move that you got to watch out for. That is almost a 6% move to the upside. I mean, that one, you start talking like 6-7% move, that is statistically significant. It is huge move to the upside. But here's one of the big takeaways from this. So the Russell is ripping right now, and it's ripping because energy explosive. And by the way, we had that one all day long. We've been bullish in energy, and we caught all of that up move inside of energy. The aspect, though, that kind of resonates with me in the opportunities over here, you look at the financials, huge gap to the upside. Again, an unprecedented move, one of the biggest moves, KRE. KRE, this is actually the regional bank ETF. Again, the regional bank ETF, a just blistering move to the upside, right? And this is one where I took a position in here early on in the day and getting a little bit run over, but the day is young, and I kind of like my position, because what I'm about to point out to you is going to be critical. You know, it's not about where we're at right now, it's where we're going. And I said this in the weekend update, and I'm going to say it again. Both the US dollar, okay, and the bonds, they've telegraphed the election perfectly. Okay, to say that they, you know, look, oh, they didn't see this. Of course they saw it coming, right? You can see the bond market actually selling off over here. You can see the dollar rallying. I've been talking about for the last 2 weeks, the dollar rallying is indicative, okay, of tariffs. Tariffs are coming to a theater near you. But the combination of what we're seeing on the screen right now, again, it was really clearly telegraphing. If there's one also huge takeaway from the entire election, okay, is that the markets are actually handicapping this. The media did not. Again, the big takeaway from that is I don't think anybody's going to listen to the media again for the next, like, what? I don't know, 100 years, because the markets, you know, and some of the political betting markets have been spot on. Obviously, the S&Ps, the bonds, the dollar, okay, this was your marketplace to dictate, okay, the outcome of this election. Here's the interesting part. As I said, it's not about where the market is right now. It's not about even the SPX, because we are effectively outside the upper edge of the expected move. As I said on the weekend update, it's about this bond market. The bond market is tanking. And this is just, and by the way, not only is the bond market tanking, look at the volume in here. Guys, if you haven't looked at the notes, some of the highest volume, okay, outside of a roll, some of the highest volume actually in recent history. And we have about an hour left inside of the trading day. But the point of bringing up the side of the bonds, okay, is look at the 10-year. This is the interest rate associated with the 10-year. You got an interest rate that was just a few weeks ago sitting at 3.6%, okay? And here we are right now at about 4.4%. I mean, this thing is going to be clear up to 4.5% and then some. In fact, when you zoom out on the chart, specifically when it comes to rates and bring up like a 3-year, this is looks pretty obvious that you could even see like a 5% 10-year. That's a 5% 10-year, which would really cause an issue. I think what you have to think about, at least to me, all right, and what I am looking for moving forward, if you get any continued follow through, okay, I think the market's performing spectacularly well, specifically in the financials, for the fact that the bonds are actually down. And here's where, traders, look, people say, well, the bonds are down. That means interest rates are up. And if interest rates are up, the financials are going to make more money. That has nothing to do with why the financials are up. The financials are ripping to the upside, okay, because they're going to can the head of the SEC. He's first to go. All right, pack your crap. He's out the door. It's about deregulation is why the financials are actually ripping. But the problem that you have, okay, is that if the bonds continue to tank, you're actually going to get this incredible amount of unrealized losses, because any bank, and there's a lot of them, any bank that is long bonds, have they made money anytime that's 3 years? The answer is no. Have they made money anytime in the last 15 years? The answer is no. We're at one of the lowest points of the ZB. So their unrealized losses, they're accumulating billions more of unrealized losses. If you get any more sell side activity inside of this bond market, you're not going to be able to handle it. And that's actually going to spin this marketplace, okay, right back down. Why am I bringing this up? Oh, because the Fed is coming tomorrow. The Fed is coming. And if there's going to be a discussion to have, yeah, the Fed's going to cut. Who cares if they cut interest rates? This is the 30-year. They're cutting what? The shortest term rate out there. They're cutting like the overnight, the discount point. No one gives a damn about the overnight rate. It's all about the 10-year. It's all about the 30-year. And if they continue to sell off, people, it's over for the S&Ps. The S&Ps are going to crater. So even though we're looking at these this SPX and we are rallying, and we are right now, that rally and holding that rally is completely dependent upon that bond market. Now, volatility has dropped. How substantially? Well, pretty good. Volatility is all the way back down to the 16 level. The vol futures have actually backed off a little bit here, okay? But I cannot stress this enough. Even though you're seeing like volatility, like we're still in a very, very mild backwardation, okay? Just between this November and the December, very, very mild backwardation. Can't stress this enough though. I want you to look at the SPX with me, and one of the final things is, what kind of risk do we have for the remainder of the week? We still have $65 of risk inside of the SPX. So people, look, you've been through some volatility, you've been through some stuff, okay? Before anybody goes home high-fiving one another, about market gains over here, you best look again at that bond market, because that bond market very well in the near future could define you in this marketplace. And with the Fed coming tomorrow, I don't know about you, but I kind of like my odds over here. Look for the financials. They can still have a little bit more upside. Look for some wild pullbacks in here. Look for some wild pullbacks possible in the S&Ps. And this is not me trying to bear up. Okay, I'm the first one to tell you, if the bonds get a bid back under them, if these bonds could actually stabilize or get a bid back under them, the S&Ps are going to have their way. They're going to head a little bit higher. Okay, my inclination, though, looking at this right now, is we're starting to see effects of the bond vigilantes. With those bond vigilantes, how long can the S&Ps actually hold it together? Yeah, you're on borrowed time right now. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.